Time now to get some common sense about the Fed and higher yields from Craig Bolanos, the CEO and founder of Wealth Management Group. And Craig, our viewers are going to love this because you are about to bust two myths about higher yields and rate hikes by the Fed. What can you tell us? Because sometimes history shows that these fears might not exactly be warranted.
That's right, Angela. There's two things swirling around the news outlets today that might just mislead investors on how to handle their portfolios, especially if history is our guide. And to be quite frank, it's the only guide we have. We gotta bust the myth that higher yields and rate hikes are bad for all investors. Now, sure, the 10-year Treasury yield has soared this year, bringing down some of the highest flying stocks, but higher rates aren't bad for all stocks. Typically, higher yields mean the economy is growing, not slowing. And for that reason, stock prices tend to expand overall as yields trickle higher, contrary to what you might hear around the water cooler. And this chart shows that during the past 6 times we've witnessed rates on the 10-year Treasury rise, the S&P 500's actually put in a positive performance.
Craig, that's exactly right. And we've been talking on our show about the Federal Reserve interest rate hikes are for the first time in a long time. Yes, it starts a new cycle, but the hikes themselves are not that large, and it might not be a big warning sign to investors.
Well, yes, of course. I understand this is the start of a new cycle, the last cycle having occurred in 2015, and history does suggest that stocks are going to see more volatility. But volatility is not the same thing as a bear market in stocks. Fed rate hikes by themselves don't mean that bull markets are approaching an end. In fact, a year after the first Fed rate hike, in every single one of the past 8 cycles, saw the S&P 500 index finish higher a year later. So sure, some of the returns were muted, but by no means did the start of Fed rate hikes lead to a bear market for investors. Bottom line, there's always things to worry about. But in the end, if the economy is humming along, and it is, if earnings remain strong, they are, then the path for equities should be higher, albeit with a little bit more volatility this year. I'm Craig Bolanos, the CEO and founder of Wealth Management Group. If you'd like to learn more, you can. We want to help you get retired and stay retired. Our website, investwithwmg.com.
Go to businessfirstam.com for where to see our show on TV.